Over IRS Form 8886, the Reportable Transaction Disclosure Statement. Before we get too far into this tax form, we should probably better understand what it's used for. So the Internal Revenue Service has guidance on certain tax avoidance practices, such as tax shelters that may be prone to abuse. And they've categorized certain transactions as reportable transactions that taxpayers must disclose with their tax return. And for certain first-time reported transactions, they actually need to be reported to a certain office within the Internal Revenue Service for review to make sure that it is not considered an abusive tax shelter. So there are fines and reporting penalties for failure to report required reportable transactions. So for the first time taxpayers, an initial filer under line C right here, they would send a copy of this form to the Office of Tax Shelter Analysis, that's the IRS, and then they give rulings and determinations based on the facts at hand. So this form probably would most likely be completed by a tax attorney or by a CPA on behalf of either businesses or tax-exempt entities or trusts and estates with very complicated tax planning or tax avoidance strategies, so that when you disclose a legitimate one that appears to look very similar to one that the IRS has deemed to be abusive, then the IRS has information that it can go through to make sure that the reported transaction is in fact an allowable transaction and that any tax benefits you derive from that are acceptable. So there are several different types of reportable transactions. Before we get into the form, I'll list them out right here. So listed transactions, there are confidential transactions, transactions with contractual protection, loss transactions, and then transactions of interest. And these are 5 categories that the IRS has deemed to be important because each category has a very specific benefit that might be attached to it. So we'll go into more detail when we get to line 2. First, we're going to start at the top of the form where we've completed the taxpayer information on behalf of our hero, John Doe, and then his identifying number. In this situation, it happens to be an individual taxpayer, so the identifying number is his social security number. If you were filing this on behalf of a pass-through entity or a corporation, then it would obviously be the employer identification number. So taxpayer name, number, street address, and town, state, and zip code. Then before we get to line 1, line A basically states if you're filing more than one form with your tax return, then you should sequentially number each copy of the form and then enter the statement number. So for example, if this statement was 1 out of 2, then that indicates that there's a second form 8886 out there that should be labeled 2 of 2. In line B, you would enter the form number for the tax return. So if you're an individual and you're filing Form 1040, you would put that. If you're an estate or a trust, it would be at Form 1041. If you're a shareholder in an S corporation, it would be Form 1120S, 1065 for a partnership, so on and so forth. And then right below that, you would enter the year of the tax return. So in this case, In this case, we've indicated that this is for 2022, and then we're going to check the box that applies. So for an initial year filer, that's the additional reporting requirement where you would need to send a copy of your completed form to the IRS office that I mentioned, the Office of Tax Shelter Analysis. And then if there's if protective disclosure applies, then you would need to check the appropriate box. So the thing about protective disclosure is that you can indicate that you're filing on a protective basis. The IRS will not treat this form any differently than another form, 8886. And if it's incomplete, meaning that you just put in a statement saying that more information is available on request, that does not count. So make sure that you complete the form in full with as much information as you can possibly provide. That would be what allows you to file for a protective disclosure. So in line 1A, we're putting the name of the reportable transaction. I just happened to grab I took a look at one of the IRS bulletins, and I just came up with a micro captive transaction. We'll discuss that in a little bit more detail in 2022, and then I just made up a registration number. If you actually have filed a registration for a tax shelter or a reportable transaction, that you should receive a reportable transaction or tax shelter registration number. You would include that in line 1C. Basically, if you've received a registration number, then you're just reporting that you committed a transaction that was previously registered. In line 2, we're going to check one of the 5 types of reportable transactions. So a listed transaction is one that is the same or substantially similar to a transaction that the IRS has determined to be a tax avoidance transaction. So it's basically already listed. You can find guidance on that in Internal Revenue Notice 2009-59, and the IRS maintains an updated list of listed transactions on its website. So if you participated in a transaction, you have participated in a listed transaction if your tax return reflects tax consequences or a tax strategy described in the published guidance, if you know or should know that the tax benefits were directly or indirectly from this tax strategy, or if you're in a type or class of individuals or entities that the published guidance treats as participants in that listed transaction. So the next is confidential. Basically, this is a transaction that's offered to you or a related party under conditions of confidentiality, meaning that the advisor is placing a limit on your ability to disclose the tax treatment under conditions of confidentiality. So even if it's not legally binding on you, it's still treated as a confidential transaction. And then there's also a minimum fee that taxpayers may pay. So to be considered a reportable transaction, if the taxpayer in question is a corporation or a partnership or a trust in which all the owners or beneficiaries are also corporations, then the minimum fee would be $250,000. For all other taxpayers, the minimum fee would be $50,000, meaning that if you paid $50,000 or more, you'd have to disclose this. Transactions with contractual protection simply means that you're participating in a contract with a right of a refund or partial refund if you don't get the intended tax benefits. So you might pay fees that are contingent on your ability to get tax benefits. So if someone says my fee is 10% of what you save in your taxes, that would be considered a contractual protection type transaction. Loss transactions are transactions that result in you claiming a loss under Section 165. So that basically means, if you're taking a loss that you really shouldn't be entitled to, so that you can offset gains or reduce income or go around some other limitation, then that the IRS considers that to be a reportable transaction. And then finally, transactions of interest, which I happen to pull this particular micro captive transaction from. Those are transactions that are the same or substantially similar to transactions that the IRS has identified, where the transaction has potential for tax avoidance or evasion, but there isn't enough information to determine if that transaction should be identified as tax avoidance. So basically, kind of saying that the IRS has this as a category where it might be a transaction that the IRS will disallow because it's illegal, but they don't have enough information to make that a blanket statement for every similar transaction. So this particular transaction, the micro captive transaction, was published in Internal Revenue Notice 2016-66. We'll just say that John Doe participated in 2 of these through a partnership. So it actually was through an S corporation. We'll call it Acme Investments. The employer identification number, we'll just give it a random. And then enter the date that you received your K-1. So if you didn't receive one, you can put none. That's fine. And then below that, you're going to enter in line 6, you're going to enter the name and address of every individual or entity to whom you paid a fee regarding that transaction. So in this case, John Doe paid $150,000 to John Smith. Here is his identifying number and name, address, city, state, zip code. And then we're going to get into the facts of the case. So this is probably where your ordinary kind of individual taxpayer needs to let their CPA or tax attorney do the heavy lifting on this, because this is not, it's easy to fill out the form, but it's not so easy to understand what you should be completing, what information you should be completing the form with, and where to get that information. So in this case, basically a microcaptive transaction is one where basically you have a related party that's an insurance company, and you have a situation where you buy an insurance policy and you're writing off the premiums, but the insurance company has structured itself under Section 831 so that it only pays taxes on investment income and not the premiums that you paid. So you basically are taking a tax write-off for the premiums, but the insurance company is not collecting that premium as revenue the way it should be. So this is one where you really need to kind of make sure you understand enough of the internal revenue code to know what you're saying. Then you also have to know whether or not what you're saying makes sense. And then you have to know that what you're saying makes sense because you've compared it to the existing case law or revenue bulletins, and you've come to your own independent determination that this is a legal transaction. Obviously, the IRS expects everyone to report all transactions, but if you're not able to clearly articulate why your transaction is a legitimate transaction where the deduction or the capital loss or the exclusions should be allowed by the IRS, then you're really not doing yourself a favor. You'll simply find yourself with a disallowed tax benefit. You're going to have to redo your tax return, or you're going to have to pay interest and increased tax, possibly a penalty, if you did not practice reasonable cause or due diligence on your reporting your tax position. So this is where your tax attorney or your CPA is going to earn their money, by helping you sort through the facts of the case and really present them to the Internal Revenue Service in a manner that allows you to maintain that tax benefit. So in line 7, we'll start by identifying the type of benefit that was generated in the transaction. According to the bulletin, generally being able to take a tax deduction while the insurance company is excluding that revenue from income. Line B, we're going to enter the amount of your tax benefits. So the tax benefit, well, if I paid $150,000, I'm probably getting $50,000 of benefit out of it. The anticipated number of years, well, let's just say that is over a 3-year period. And then I'll put my total investment or basis in the transaction. And then in E, this is the narrative that you're putting in. So I bought an insurance contract that allowed me to do blah, blah, blah. And again, we won't go into too much detail on this one particular item because the facts of every case are going to be very different. In line 8, you're going to identify everyone that's involved with the transaction, if they are tax-exempt, foreign, or related parties. So in this case, John Smith is my partner. He's the person that I invested with, blah, blah, blah. So that's why they're a related party. If they weren't a related party, then I would not complete this form or this part of the form. So you'll, use their name, the identifying number, address, description of their involvement. If it's a foreign entity, you'll identify the country of incorporation for each individual or related entity. Then you need to explain how that entity is related. So, but you can find a lot more information about the different types of transactions that you should be reporting in our article. Basically, so we've completed this tax form. It's 2 pages. Once you're finished with this, you would attach it to your income tax return, regardless of what you're filing. And then if you're an initial filer, you would also send it to the Office of Tax Shelter Analysis. And then every year that you're using this transaction, you would file a new 8886. So that's all we have for this article. If you want to know more about completing your Form 8886, simply check out our article, which you can go to through the link in the show notes, or you can go to our website. Simply type in simply go to teachmepersonalfinance.com, type in IRS Form 8886 in the search bar, and you should see our article appear. If you like our articles, please subscribe to our newsletter. And if you like our YouTube videos, please subscribe to our YouTube channel. And if you have any questions or comments, please post them in the show notes. Thank you very much and have a great day.